It was a good day for the Aussie market, and I think what we are starting to see is a little bit of portfolio and window dressing coming through. We're almost at the end of the quarter, and in fact it's been the best quarter for the Australian share market since September 2009. The market's been up 10.2% in the quarter today, and that beats some of our peers like Japan, which is up 6.9%, the US stock market, the S&P 500 up 5.4%, the UK, the FTSE 100 up 5.4%, and China up by 9.4%. The good news is that the gains have been all across the market. All sectors have been higher, with just the one exception of the property space. But the best area has been the materials space, with a gain of 17% so far in the quarter today. And that really mirrored the performance on the Australian share market today. Generally, we saw a rise, most sectors trading higher, the best sector being the materials, and one of the only sectors in the red being the property space. So really mirroring what we've seen in terms of the quarter. So that sort of lends itself to a little bit of portfolio shuffling going on. If we have a look at the market as well, one of the interesting things is we're finally seeing the small cap index outperforming. The small ordinaries index up by 14.6% during the quarter, compared to the market up by 10.2%, and the top 20 stocks, which is up by 10.2%. So nice to see the small end of the market finally rallying in the quarter. But all up, it's been a pretty impressive performance for the Aussie share market. So it does look like a little bit of window dressing happening today, although volumes have been relatively light, with only $3.3 billion being traded.
Over the quarter though, Julia, I mean the impressive gains we've seen on our market, just over 10%. What do you put it down to?
Well, the material space has been the main reason why we've seen a big jump back into in terms of performance for the Australian share market, and part of that has been the commodities story. We have seen commodity prices bouncing back, especially iron ore, and that's one thing that's really surprised the market and surprised analysts. We're still seeing iron ore at $133.80 US a ton. So strength in this iron ore price, great news for some of our iron ore miners. In fact, today we saw Rio Tinto trading up 1% and Fortescue trading up 1.6%, despite mostly a negative performance by our majors in overseas markets overnight. So that strong iron ore price certainly helping that commodity space. Also, if we have a look at the market, I think we are starting to see some of those short positions in key stocks being unwound, and one of those is JB Hi-Fi. I mean, a massive performance today. The stock up 2.8%, reaching a 52-week high today. The stock's up 140% over the last 12 months. But if we have a look at the short positions, which are still open, it's 8.7% of its stock. And while that seems high, if we have a look at the end of last quarter, where short positions in JB Hi-Fi stood at 16.5%. So we've seen almost half of the short positions for JB Hi-Fi being closed out during the last 3 months, and that certainly helped share prices. So some of the other stocks that we're watching with very high short positions in the stock are Myer with about 14%, Fairfax with 13%, we've got Monadelphous with about 13%, also Cochlear with about 13%. So these are some of the highest short positions in the market at the moment, but certainly the unwinding of the shorts helping JB Hi-Fi share price.
Yeah, JB Hi-Fi up to any sort of reasons as to why the weakness today?
Well, CSL was the key reason why the healthcare space actually saw a loss on the market today, and it is because we saw one of its competitors, Baxter International, dropping 6.4% in US trade. Now that seems to be on the back of a report which was out from JP Morgan, and which cited competition in the haemophilia drug market, and it was actually quite a big move by Baxter International. We have a look at Baxter International. This is the share price over the last 2 years, and I've just got the 200-day moving average on the top there. You can see, well, it's been a phenomenal ride for Baxter International. Just that performance yesterday means there's been a pretty clean break of that 200-day moving average line, which is that red line there. So technically it is looking quite vulnerable. If we compare CSL though, while it's a similar trajectory, still very much over that 200-day moving average line. So CSL, one of the best performers on the market over the last 2 years, doing extremely well, but still very comfortably above that 200-day moving average line. We have a look at it from a fundamental point of view. CSL, I guess it's the product innovation and some of the demand coming out of China, which is going to help drive its share price further. So we're really looking at some of the new products that it's looking at, and in the innovation that it's had to drive earnings growth in the future. So CSL shares down 1.2%, mainly because of that report and the big fall that we saw in Baxter International, but still strong demand coming through from China for products like its albumin product, and of course the product innovation that it's showing at the moment should help to drive earnings growth.
This has got further to play out. Today will not be the end of this. this takeover saga, and you've got a captive audience here in Chris.
Well, we are watching Bigger Cheese to see what their next move would be, but we haven't seen any other bidders coming to the table. So I guess that's one of the things that's keeping back the bid. But I noticed that Bigger Cheese, when it first made the bid for Warrnambool cheese, it was at about a 28% premium to share price, and now there's no discount. Warrnambool cheese, Bigger Cheese offering 1.2 shares plus $2, and that's really no discount now. So it does look like shareholders are expecting more. Usually, even when we do see a takeover offer, the share price of the takeover company does trade at a little bit of a discount to the takeover offer, but in this case we haven't seen that discount. It's interesting, this agri space, some stocks are reaching 52-week highs. For example, Bigger Cheese reached a 52-week high today, but on the other end of the spectrum we know that other agricultural companies are doing very tough. I mean, yesterday we heard from a crop protection company which wasn't doing so well, and today we saw Australian Agricultural Co actually reaching a 52-week low. So while we are seeing some of those agri stocks doing well, it can be quite a volatile area and a difficult one to predict.